Hi everyone, it's Dave McLaughlin here from ASXMarketWatch.com. Just thought I'd really quickly go into a 20-year outlook of what actually happens when we go through a debt crisis and a banking crisis, and also have like quite a long war that does drain the resources of a country. Guys, this has happened a lot of times throughout history. Like, it's really it's not actually a new thing. It might feel like it's new and it's all crazy and exciting or scary, but this has happened so many times in the past that I just really wanted to bring it to your attention and show you what you can expect by studying history really quickly, because those who don't study history are doomed to repeat it, as they say. Now, really quickly, I'm going to go through the Dow Jones throughout the last 120 years. I'm also going to go through, so that's the American markets. We might look at Australian markets, but we'll also look at Japan, because Japan is extremely important as well. A very good market outlook there. That will give us an idea of what we can expect over the next 20 years. And the reason I say that is very simple. This is the Dow Jones, looking at the Dow Jones from 1900, so the early 1900s, through to about 1919 or 1920 approximately. This is your chart here. Now, have a look at this chart. Is it going anywhere? Hell no! It's basically, you know how you get your financial planners and they'll show you a chart of the of the All Ordinaries over the last 100 years, and it's going up, and they're like, oh, the market always goes up over time. Well, let me just tell you right now, that's a whole bunch of BS, okay? It is not true. The market will go sideways for extended periods of time, and this is basically proof of that. So what we're looking at is this is, as I said, from 1900 to 1919, 1920. Now, what we had during that time, during 1907, there was a banking crisis. There was, like a debt crisis during that time. So it's happened before. During, I think, is it 1914? Yeah, 1914, World War One. So we had a huge world war, obviously, and that was, a large drain on the economy and the resources as well. And so, these things are definitely not new. We've had all of these things, and that's exactly what tends to pan out over that time, is a whole bunch of sideways movement. But in between that sideways movement, as you can see, we've got maybe 1 year of up moves, 1 year of down moves, 1 year of up moves, 1 year of down moves, 1 year of up moves, 1 year of down moves. So you can still profit if you know how. It's just a matter of, it's possibly buying and holding may not be the best strategy during those periods of time. Now, flash forward, as you can see, we get nice, beautiful bull and bear markets over long periods of time, and flash forward through to the 1960s, 70s, and 80s. Look at that. Does that look familiar? Of course it does. This is 20 years over the Dow Jones. Again, what happened during 1960 to 1982 approximately? Well, we had things like stagflation. We had more wars. The wars that happened during the 1970s. I probably do not need to go into all of those details. We had oil crises. We had, more banking crises. I think, various different things happened there. Lots of debt, and banking crises during that time, lots of wars as well, quite large drains on economies. And what do we see? We see sideways movement for approximately 20 years. Now, again, during that time, down, up, you might get 1 year of down moves, 1 year of up moves, 1 year of down moves, 1 year of up moves. It's not exact, but yes, it will happen. See here, 2 years of down moves, obviously. And yes, so the thing is, you have to be prepared and you have to be ready, and you have to be able to read where the market is telling you that it's going. The market will tell you if you care to listen. Now, so that's really simple. Where are we today? Just as a matter of interest, in around 2000 to where we are today, I guess, to 2011. Hope you can see that. That's around 11 years that we've got so far, and as you can see, it's it's not really sideways. Like it still is kind of sideways. If you'd bought and held in late 1999, you'd still be nowhere. Like your portfolio would have literally gone nowhere over 11 years. So I guess you can call that a sideways movement. What does that mean for us? Well, it means that potentially, if we're looking at around 20 years, there's still 9 years left of this sideways gyration. Now, last but not least, guys, and again, this is really important stuff. Japan is the other really massive lesson that we have to learn from. In the late 1980s, and I'm just going to go back here so we can see it. Here we go. Beautiful. So as you can see, beautiful bull run. Look at this. Beautiful, beautiful bull run in the late 80s, until all of a sudden in 1989 or early 1990, it popped basically. Now, what happened after then was 20 years. As you can see, this is the very top in the beginning of 1990. Down, 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 down. As you can see, 20 years, and it's still going, still going, still going, still going, still going. 20 years of downwards movement. So in other words, if you'd put money into stocks in late 1990, you would actually be well down on your money. You'd actually have a third of what you had when you started, just basically using a buy and hold approach. Now again, did the market go up and down during that time? Yes, absolutely it did. So as you can see, we might have 1 or 2 years of downward movement, 1 or 2 years of upward movement. Down, up, down, up, down, up for 2 to 3 years, down for 2 years, up for 1 year, and now we're heading back down into another downward period. But as you can see overall, the longer term picture, this is a very long term downtrend, 20 years, the overall picture is down. So that was a property bubble, literally a property bubble in Japan, and still they have not recovered from it. So this is something that you have to be very wary of. It can happen, and when you least expect it, it may happen to the country that you're in. But yeah, so you have to know how to look at where the market is heading, whether it's heading up or down, over the year, because usually you get moves that will last for about 3-6 months to a year as well. These are the things that you have to be aware of. Please, basically all I'm saying is educate yourself and get the knowledge, so that you can look at the overall conditions of the market, see where the market is heading, see if it's going to gyrate upwards or downwards within that overall sideways movement during a debt crisis, a banking crisis, or quite a large war, as we've got going on at the moment. Guys, I hope that has helped. I love your work. Please stop by the website asxmarketwatch.com. Lots of free stuff there and a whole bunch of good times as well. What can you say? Guys, have a great week and happy trending. Bye for now.